Hi everyone, this is Red with RedDragonLeo.com, and this is my second video, and we're going to go over the technicals only on this. I like to sometimes veer off of that about once a week. On the weekend videos, it's when I like to throw in a lot of my thoughts on the economy and the world, and there's a lot of other great people out there that are technicals, analysts out there that are much better at me than this, and so I kind of focus on getting you the fake prints that we see, so we know where the market's going to go when it starts going in that direction, and trying to tie the pieces together with the Bilderberg Group and the Legatas and the Pilgrimage and the crooks, trying to piece it all together to see if we can't work it in with technical analysis, because technical analysis isn't always right. Again, like I said in the previous video, it might be right 80% of the time and wrong 20%. And I mean, I don't know. I'm just making up these numbers, but I find that it has a streak where it runs and is correct for quite a while, and then all of a sudden it stops, and you're like, okay, what happened here? Well, manipulation. That's it. New money coming to the market, but that's what you got to figure out. So we can sit here and look at this monthly chart, and we can see, if you just look at this and see these moves down, you'd expect to move up like this for a wave 2, and then a wave 3 to start here on the wave down, and it didn't start. It went down, stopped, and come back up. I mean, what the heck is that in Elliott wave? Wave 1 down, 2 up. That can't be a 3 down, and then so what is it? An ABC move? Is this like an A, B, C? Could be. It's just, it's just strange. It just doesn't look like other patterns that I've seen. Like here, look at this one. This was pretty clean. Down move, up for 2 months, and then down on the wave 3, or so. And here it's just not clean. So that's just very, very frustrating to see so much manipulation in this market. I don't think it's ever been so bad. And I think, again, that is because of the massive printing of money. They could not have done this in 1929 in the stock market crash. And yes, they did manipulate that one too, but it could not have been done because the money was tied to the gold standard at the time. So the charts would have worked out much better on a technical basis because they didn't have as much control. So monthly basis, I don't see anything here really other than us hitting this trend line, and that's pretty major. So if we bust out of this, then we're going higher, but it so far it doesn't look like it. Looks to me like it's getting ready to reverse here from this trend line that the chart pattern guy's drawn in here. So that's pretty obvious. And this would also put up the negative divergence that we get right here, the peak here, and then a smaller peak, and then on our way down. Same thing here, rolling down. So, but we're going to the shorter time frame, so let's get over to the weekly. And there's another major line here that the chart pattern guy's drawn in here, and it's pretty obvious, and you can clearly see we bumped up against it, and we did end up with our A, B, C move up, this being our C wave up. And last week ended the Legatas Pilgrimage. Well, I'm sorry, on the 20th. It ended on the 20th of September, which was the week prior to this. So we really didn't go anywhere this week. We pretty much stayed sideways, and so I think that the turn date is still valid for the September 20th Legatas Pilgrimage being the period that the market reverses trends. It's just been delayed. We never went anywhere. This week right here, for the last 2 weeks, we've been pretty much the same spot. So it's just been delayed with a little injection, a little quick fix of $30 billion that they threw in the market to hold it up for 2 more weeks. And I think that's it. I think it's still going to turn down from here. We can clearly see we're banging on that trend line. We can clearly see we're up here getting ready to roll over and getting ready to roll over here. Everything that I see points to this thing rolling over. Now, could they just keep on going up? Well, yeah, I'm sure they could if they just keep injecting money into the system. They keep injecting money. I don't think they're going to, though. I think they're running out. There's an article on Zero Hedge that talks about Goldman Sachs is wanting the quantitative easing part 2 November 2nd to 3rd, and they're going to try to vote for it, and if they don't get it, then rest assured the market's going to crash. I don't think they're going to get it. I don't, and I think it's going to go down into the elections, and the only thing that's going to basically save it, which I think is already planned, is Republicans will get in after the elections is over on November 15th, and the market will stabilize then. But during that time period, I think it's going to fall off a cliff. So, and I think we're going to go down. This is a weekly chart here of the S&P, but I have the fake print of the Dow at 8,300, so that puts us somewhere in this range down here, 850 something to 900, somewhere in that range. We got another fake print here of 880 just recently on the SPX, so that's probably going to correlate with the Dow 8,300 print, most likely, and that print I just got last week. So Friday, I believe, one of the posters on the site posted it. Here, I will show it to you. Hang on just a second. Okay, this here was posted by Jason 70, posted it on my blog, and you can see here. This was done Friday. That's when this was. I think it's Friday. Yeah, Friday or Thursday of this week. He sent this over to me. That he's been seeing this print. He said he's seen it several times, which I think is kind of strange. But that's obviously we didn't go down to 885 on Friday, and that's about where that's at right there, which is very strange. So what's that tell you? That should coincide with the downside 8,300 print that I have for the Dow as well. That was thrown up, and I will post that again here for you so you can see that. Hang on a second. Okay, there it is. This was done back on the was it June? Back in June 28th, I guess, here, according to week of when that was done. So April, let's see. Okay, yeah, I guess that's when it was. But you can see where the market was at this time, and there was just this candle here on Yahoo showing that the Dow was at 8,300. And you can clearly see it right there. It's fake, folks. It's not a real print. It's where the market's going to go. Notice this coincides with the low right here from this first sell-off right here, just from basically what a lot of people are calling wave 2 down in this 5-wave push up. If you can call this 1, 2, 3, 4, 5, and then we've just started wave 1 down, wave 2, and then we're getting ready to start wave 3. Of course, it's not showing on here the full amount. So anyways, if we go back here to the same thing, wave 1, 2, 3, 4, 5. Okay, so look where that's at. That bottom there is at 885. How coincidental, or something like that. 86, 870, 875, somewhere in that range. So I think that's where we're headed, and I think we're headed down into November. The elections, I think, is about the thing what's going to save us, or not really going to save us. It's all planned again. If the Republicans win, and they're predicted to win, so assuming that they do, then it'll cause gridlock and nothing will get done, and the market will rally. So it's a planned sell-off. So the November 2nd and 3rd date that Goldman is supposed to try to get this bill passed to do quantitative easing 2, that was on Zero Hedge's site. Now, where I found this link was off of Reinhardt's site, one of the posters there, and I'm going to show that to you right now. Just give me a second here. And here it is. Move this over here, and you can see right here the zero hedge article. This is, again, all the way down towards the bottom. On the last post, it's got a bit of gold. And I follow zero hedge too, but I can't keep up with them all the time. They just have so many articles that they got going on. But again, here's the key. November 2nd and 3rd is the meeting. They're wanting 500 billion. Now, what did Reinhardt just say that they put in? They put in 30 billion. That's why we've not went anywhere in this so-called rally. It's just a little delay. In the previous one that they put in was 800 billion. So if they put 500 billion in, maybe they don't get it. Maybe it's all planned. They don't get it. It fails. The market crashes down into November 15th. The Republicans come in and say, well, okay, we changed our mind. We'll go ahead. We're going to have to save the economy. So we're going to put some money in. So, okay, so you get it. You're going to get your money. You know, but the first time around, it fails. Blah, blah, blah. So that's that for you. Back to the charts here. As you can count the days here, we are getting near the maximum amount of days that I have seen before it falls off the cliff. Here we had the big up day. 1, 2, 3, 4, 5, 6 days. We're at 1, 2, 3, 4, 5, 6 days. That means Monday, Tuesday at the latest, I guess, could be the turn date. Let's see, 1, 2, 3, 4. There's 5 there. 1, 2, 3, 4, 5 there. So, you know, 6, maybe 7 days before it's ready to roll over. You can clearly see on the charts, it didn't take a technical analysis genius to figure out this. Sure, we could go up here and put in a little bit more, but I doubt it. I think we're going to at least go down here, at least put in a small one if we're really going to rally on up and go on up towards the rest of the year up to 11,800, my topside fake print. Then this would put in a small one and move back up, a small histogram tower to the negative side. I don't see that happening because of the weekly. You know, look at the weekly. The weekly is ready to roll over. If the weekly was rolling up like this, moving up, then yeah, the daily could do that because the weekly is pushing up, supporting the daily. It's not now. It is ready to roll over. It's peaked, ready to roll over. You can clearly see it's up here on the at 80 something on the stochastics above it. So it's ready to roll over and go down, and the daily's matching up with it. The daily's ready to go down too. So the histogram towers that go down here should be quite significant. It should be like this. I mean, this should fall really hard. And they're just delaying it. With that money they just put in there, they're just delaying it. Probably this was probably the start of it, and they pumped the money in, and then, well, look at it. That's the 20th. Looky there, it's the 20th. You know, coming right out of the Legatus meeting. That very week was when Ben Bernanke talked a little bit. So they pumped it up. They put the money in, and it's held it sideways. That's the most they could get out of $30 billion. You know, so it's not really a quantitative easing, but it's just a little small injection. So looking at the 60-minute chart, we see I see a major triangle here, and here. There's a major triangle going. It's going to break up or break down. You also see down here, sideways consolidation was a bear flag that did not play out. It popped back up. Same thing here. We went down, sideways consolidation. This is a bear flag. We should pop down. Will it on Monday? I don't know. The 60-minute chart looks like it's ready to go pop up and put in some positive bars. So, you know, it does have a little bit of room. Same thing here. It could go up here on this. Same thing here. It's working its way up. So maybe it pops up on the triangle. You know, it's hard to say. Same thing here on the 15. We got down, sideways consolidation. Bear flag failed and it went up. Down again, sideways consolidation into the triangle. Will it fail? You know, here's a triangle. Draw a line, draw a line. You know, the 15 wants to go down. Let's look at the 30. The 30-minute chart, that's a 10-minute. 10-minute wants to go down. The 30-minute, this one here wants to go up on the longer time frame. Roll over on the shorter time frame. So, you know, the best I can tell you is Monday is probably going to break. I mean, I'm just guessing. There's 50-50 chance of the triangle, but I just have a feeling with bullish Monday it'll break up, and then we'll put in our high on Monday. From the rest of the week, it's going to roll over and sell off. That's my forecast. All right, I'm running out of time. Good luck, everyone. See you on the blog.